Another key point in consolidations in F7 is where you're dealing with associates. IAS 28, etc. Subsidiaries, of course, IAS 27 and IFRS 3. IAS, International Accounting Standards, IFRS, International Financial Reporting Standards, just to name that changed in the year 2000. They have equal status from the same bodies they are issued. So the key approach with the associate is to ignore the associate except as a one-line item in the consolidated statement of financial position. The reason is you don't control the associate. So it's absolutely key that you do that. When you're bringing in the parent and the subsidiary, when you're consolidating, of course you bring in all of the parent and all of the subsidiary. And then you take out the NCI, non-controlling interest of the subsidiary. But when you're dealing with the associate, because you don't control the associate, you just have 40%, less than 50, of course. Because you don't have majority, strictly it's 50 or less, let's say 40%. Because you don't have control, you have less than a majority, you just have something called significant influence. So you don't control the associate, so you must ignore the associate and treat it very differently to a subsidiary. Please remember that. Ignore the associate in the SFP except as a one-line adjustment, a one-line item, which of course is based on a special formula, which is the investment at cost plus group share of post-tax reserves. When you're doing the consolidated income statement, again, you ignore the associate because you don't control it, and you bring in the associate at the stage of profit after tax. So do be careful of that. So the word ignore associate is extremely important for the CSFP and for the CIS.